Day one of 90 days to taxes, and today we're going to talk about tax treatment for your business. Now, this is going to be a quick, down and dirty video. If you want the long form video, go to our channel. It's going to have a lot more information. I only have 3 minutes on shorts. So let's kind of dive in. First off, an LLC is not a tax treatment from a federal perspective. An LLC can be taxed as all the different types of business entities on a federal level, okay? Telling me you're an LLC does not tell me how you're taxed. Let's talk about the 4 different types of tax treatments on a federal level real quick. One is a sole proprietorship. A sole proprietorship has one owner. It either has no legal formation in the state or it is an LLC with one owner that has not made a tax election. Sole proprietorships file Schedule C generally. That sits on the owner's Form 1040 or personal return. If it's a farmer, it files Schedule F. So if the business is a farm, you're going to file Schedule F instead of Schedule C. Some sole proprietorships will sit on a Schedule E, and I'll talk about that in that long form video, okay? Second type is a partnership. Partnerships have 2 or more owners. They do not have to be formally registered in the state. So if you have a business and there's 2 or more owners, you have a partnership, even if you don't have an LLC or anything like that, okay? If you have an LLC and there's 2 or more owners, that LLC by default is taxed as a partnership. The partnership files Form 1065 on the federal level. That partnership Form 1065 includes Schedule K-1s to each partner in the partnership, and then that Schedule K-1 income is picked up on Schedule E on each owner's individual tax return, okay? C corporations. C corporations are the default tax treatment for corporations. So if you go and you form a corporation in your state, you are by default taxed as a C corporation. C corporations are a whole entire other beast, okay? They file Form 1120 on the federal level, and they pay tax at the entity level. They are a completely different type of entity than the other types of businesses, okay? An LLC can elect to be taxed as a C corporation. Now, there's also this default, this 4th type, which is an S corporation. It's a hybrid. I shouldn't have said default. It's a hybrid. It is a hybrid. You have to elect into an S corporation. Okay, an LLC can be taxed as an S corporation as long as it's eligible. C corporation can be taxed as an S corporation as long as it's eligible. It files Form 1120S, very similar to a partnership. It issues K-1s, which that income then gets picked up on each shareholder's Schedule E on their personal return. So in summary, there's 4 different tax types. Make sure you know how you're taxed, and I will see you guys for day 2.